The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you guys are doing well this morning. Got a lot of things to talk about today. Showing the Aussie dollar right now. Noticed that Kramer was going to reveal his portfolio, so I was kind of happy about that. The inside portfolio of Kramer, which I'm looking at to completely fade everything he's long and buy everything he's short. So I'm really happy that he's coming out with that. He's such a great guy that got everybody into a bunch of crap before the earnings this time. And he just moves on. Aussie dollar. We're going to take a look at this one first. This is one we've been looking at on a weekly, waiting for the pullback. Talked about it this past week. Got the yellow peel back happening currently. I'm going to grab my scanner. There we go. I'm going to grab this, put it over here. We're going to go right into the Forex section. And as we look at this, we're going to look at the Aussie dollar, top of the heap up here. See that yellow peel back happening there, and then we're at the bottom. Now, we've gotten a little bit below there. I want to talk about this specifically. This has kind of been one on my radar screen for a while, and we've been just kind of long and strong this thing. There's the daily. There's that inflection point. I think we might have talked about that yesterday or the day before. Here's the weekly. Again, not showing the yellow in the charts, but as you can see, yellow peel back. That means new profile attempting to appear. If we have this still in force by Friday, you know what the drill is on Monday. But let's just look at the charts in E-signal. Every time I talk about E-signal, I feel like, have you seen Truman when his wife is doing the advertisements every once in a while on E-signal? Here we go. So again, you know, when we started, we had this daily new profile attempt to appear, and that's kind of where we were supposed to be taking some weight off the trade, as you know, it kind of predicts a new balanced area. And we talked about a lot of times these things are completely explored, as you can see, most of the time. This is just one instrument. I would say that 75% of the time these fair auctions are explored once they are emitted. And they enable you to really be able to look at new support areas on it. This intermediate, I love these dailies. I like the 240. I like everything. I like all time frames. I am not prejudiced to any time frame. But in the scanner, what we have, the weekly, daily, 240 and 60, those are pretty powerful. And, you know, when we do the show, I can't cover 15-minute time frames because they're really not relevant. I mean, just for example, 15-minute and 5-minute and things like that, because they're not really relevant, you know, moving forward. Somebody catches the show late, watches it, tries to, you know, get some information. So, you know, as we look at these things, I'm a big fan of these longer term to intermediate and the 240. I rarely even talk about the 60s on here, but for day traders, I'll just tell you, within the scanner, you trade these 60-minute profiles and you keep your eye on the arrow. Eye on the sparrow. What was that from? God, keep your eye on the sparrow. Was that Beretta? Mannix? What was that? Somebody maybe can throw that out there to den. Anyway, for instance, Beretta. Cool. Keep your eye. Anyway, so you know, you can keep your eye on the arrow. All right, keep your eye on the arrow, even when it's within the balanced area. You'll notice, I mean, just on the well, let's just pull up one that everybody knows here. Canadian dollar. You look at this 60-minute, right? 30 arrow down. If you want a day trade, you use green, red, gray, arrows, okay? So let's just look at this while I'm jumping from topic to topic. And as we can see, this is our 60 minute on the Canadian dollar USD cross, and it kind of tells you, okay, there's an area to sell, there's breakdowns, there's consolidation, so I think you get the drill on this one. You can day trade literally by looking at these cells on the 60 minute. I mean, obviously, if you have our indicators outside the scanner, you can adjust those to 3-minute profiles if you want. But, this is a good little day trading mechanism here. I talk about it on some of the videos, I believe, that are on the TFNN site, unless Tommy has banned those videos. There's no porn in those videos, so I don't know why he would not have kept them up, but I think they're still up. Let's take a look, going back to the Aussie dollar and getting back on topic here. That bottom, let's go back to the e-signal charts. So daily, again, when you have violent moves and you have relatively wide profiles, and that's what this thing predicted. Remember, there's the yellow peel back in the scanner. Here's a wide profile. You know it. You're probably going to have some volatility. And we talked about, next support 76.088, and we got to give ourselves a little bit of noise factor on something like this, and that's kind of what the deal is. You got to say uncle at some point, but when we have wide profiles, these things, I probably don't talk about it enough, but they widen and narrow, and you kind of base your volatility stop type situation around these things based on the height of the profile. And we talk about this all the time. I do it somewhere between 10, 15 up into 25% of the profile, just to not shake myself out of these long-term inflection points. It doesn't look good, I'll admit that. Here's the 60 minute, and this has been a serious pullback in the Aussie dollar. And this is based on economic slowdown situations over in Asia, so-called. But that's kind of how I'm looking at this. And I'm looking at this as, we're still in an uptrend. We got a little bit of a problem here on the long term, but we're coming down to that daily inflection point. Still got a decent trading opportunity here, in my opinion. All right. I had the same thing for breakfast every day. Vodka and Monster beverage. I'm just kidding. Anyway, we're going to go back and look at the indices profile heat grid in the scanner. We're going to go into the weekly and daily. Let's just kind of look at what's going on here. And, we talk about trying to have something to take advantage of and some cross signals, anomalies to take advantage of. And as we look at the breadth charts this morning, we're going to come back and drill into this part when we come back from break, guys. I hear the music. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Keep your eye on the sparrow.
Man, late 70s. I love it. High on the Sparrow. Great tune now. Yeah, that was like a part. Remember, you just like the shows Thursday night, Tuesday night. What was the SWAT? Do you remember that one? That was kind of a cool music theme. Here we go. Mannix. I remember watching Mannix. That guy was serious. Smoked a cigarette. Anyway. Here we go. Looking at the situation on the S&Ps and looking at the breadth, this thing's weathering storms relatively well. I mean, I know you guys know that, but let me pull up the 10-year really quick, and we're going to talk about some grains in just a bit here. Here's the 10-year. We talked about this particular inflection point. The next line of defense here. We got a big FOMC meeting kind of announcement at 2 p.m. today. There's no doubt in my mind that they're not going to I guess, freak out the U.S. stock market. Janet Yellen's kids are still being held at an unknown destination by the Obama administration, and that's just the way the ball bounces. 129.02, unfair lows on the weekly, on the 10-year. So we bounced off of that, reached a low, looks like yesterday, of 129.02. That's pretty cool to be able to pick a little bit of a trade and bounce here, and there it is. And again, this is kind of a good example. Those weeklies take precedence over dailies, over 240s down the line. So when we get into those scenes, a lot of times with a decent pullback, you're at least going to have a little bit of a trading opportunity, and that's why we let the market come to us. All kidding aside, guys, these inflection points have tremendously helped me be patient. All right. And that was kind of missing in my trading repertoire for a while. And this is a way to regulate kind of a roadmap for me. And it's I'm not probably making my point very well, but it's really helped me out very well. We're going to look at the S&Ps. This thing continues to, we've talked about coming off these inflection points, 2096, 2097. And that's obviously happened, but we're kind of spinning around Apple's so-called bad news. I mean, this thing's holding up relatively well. We're going to talk about that a little bit more in the future, but I think we've got a caller, John from Philadelphia. Sir, are you with us?
Hey, John Logan. Good morning to you.
Hey, man. Good to hear your voice again.
Say, John, I wanted to ask for your help on some of the ag futures, specifically.
Sure.
Maybe we could start with soybeans. John, we spoke, weeks back. I've been speculating of ended to a bear market in many of the grains and reversal higher. And now that we've gotten a leg up in these things, I wanted to ask you for your assistance here. Namely, where is the low-risk repurchase on November soybeans? And more importantly, if you find a pullback and a repurchase, where's a stop-out point to get out, signaling you're wrong and minimize your losses?
Gotcha. Well, I know you're always tuned into the den, and I know you were probably around when we were talking about waiting for it to kind of come back. And I talked a little bit about short squeezes and people having to contemplate whether they should cover, who maybe started shorting this thing a little early for really. They, in the profile system, there wasn't a lot of reasons to get short, and they're that weekly broke out, and the daily's kind of doing its thing. But I'm showing on the screen here, 978 was that big inflection point. We reached, I think, 976 and some change on the pullback, and this profile was in force. I think we actually were showing this hovering around this area that morning, two or three mornings ago. So to answer your question about the pullback, I think the pullback has happened already. It was pretty violent how it came down and popped right off of this inflection point. Now we're just kind of hovering up here again, trading around $10 a bushel. The weekly is kind of still game on. If you look at what's going on here, we had that breakout above, that retest 915. I mean, I think you were, you're preaching to the choir to me about, this thing's, what's the risk here of getting long or being in some kind of low risk option, low volatility trade around 870. Where were you at? 870? Is that where you were kind of getting, starting to talk about this thing?
868.
Okay, great. Wow, man, what a call. I hope everybody was listening to you that morning. But, the real clean and clear signal is getting above 915. So what do you do now? The long-term weekly still looks good. The daily looks good. There's some inflection points here that you could orient some stops around on the short term. The 240s around $10 a bushel. That's obviously a big psychological area. Without question, that $10 without profiles whatsoever, that's still, kind of a big deal. And then you've got this 979, which kind of coincides with this 978 from before. The daily for highs, and then this will be the 240 for lows. All of these are, mapping to the July contract, which is in the scanner, very similar levels. So the short-term support right now, are you kind of more biased towards the short side or long side right now?
Oh, no. Good question, John. Here's a point of fact. I will not, I repeat, not look for shorts.
I love it.
We've had a multi-year bear market. We've formed a massive base between late 14 into 2016 in the $9 to $8.50 range, and now we've had our first leg up. The question for me right now, and of course I don't know the future, I wish somebody could tell me, is whether we go from this 10, 20 area up to 12, or if we go back to 9. But no, I will not short it. It's either be long or be flat,
right,
is my view.
I love that. I like how you're blocking out one side of the marketplace too. That really coincides with these balanced areas and profiles. There's not a lot of long-term reasons. And as well as I do, you start playing around with these contra short, I'm just going to short a little bit and try to pick up 10 cents. Then you're all mixed. You know the drill there. I don't have to tell you about that. I'm so happy that you're looking to buy support or buy breakouts on this. Yeah, I mean, as you know, these things can really take off. What do you think about the dollar and crude oil in general? I mean, do you think that's going to kind of continue on the same path? Because that's going to obviously have a bearing on this. What are your thoughts on those?
Good question, John. Answer that question. For me, on soybean market, crude oil is irrelevant. I repeat, irrelevant.
Okay.
I do trade crude, so I know what it's doing, but I don't consider any impact between the two.
Okay.
The dollar.
Can you hang out?
I hear the music. Yeah.
Yeah, we got the music going. We'll be right back, and thank goodness John from Philadelphia is on today. We're going to have him on when we come back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. And I think we're still blessed to have John from Philadelphia on the line. Are you still there?
John, yes, yes, I am. And by the way, I do have to tell you thank you on the weekly, daily, 2 40-minute charts on that November bean contract. That's very instructive. So,
thank you.
So thank you.
I'd still like to get your fundamental comments. All things considered, if you could just keep.
Yeah, I'd be happy to. You, when we paused for commercial break, you had asked me the impact on the dollar vis-a-vis this market? I'll give you a direct, simple answer. The dollar index, DXY, that you might track, irrelevant to this market.
Okay.
The dollar Brazil real, on the other hand, is highly relevant.
Okay.
So when you're talking the dollar, you have to be specific. Dollar versus what currency?
Right.
So dollar real is highly relevant. And just to share a correlation with you, a rising real or falling dollar real, and most of us here in the States, when we're looking at currency relationships, will typically view the dollar real USBR, which is currently like 3.58, somewhere in that zone.
Okay.
So the correlation is this. Falling dollar real USBR is bullish for the soybean futures, all other things being equal. And what you can see is dollar real peaked $4.20 with a double top last fall and I think January. And it's fallen from 4.2 to 3.58. So the correlation, falling dollar real, bullish beans, we can see the correlation is working.
So you're base. I mean, I'm just going to make an analogy here. Just like we've kind of looked at the Canadian dollar relative to crude oil, and we talked about that as a little bit of a leading indicator.
That's an excellent example, John.
Then this is, you know what, guys, write all this down. If you're a grain trader, I think he's bringing out a great point here. Just like we kind of look at the XLE and the Canadian dollar and a couple other things to try to figure out, is crude oil stabilizing? Is it possibly going to have a little bit of a move here in that leading indicator direction? John from Philadelphia is pointing out this relationship. Would you like to see that in the scanner, that cross?
You betcha, man.
Well, listen, you guys got to send these things in because we had a couple of requests come in this past week, and we added all of them. Can you send me an email about that?
I will.
And we'll get it in here, and then this will be something else in the scanner that folks can hopefully get a little bit of an edge on trading beans. Can I ask you a question? You probably know this. That's why I want to ask you in particular. What % of the bean market really is associated with South America?
John,
on a year-over-year basis. Yeah,
let me share this.
Okay.
Of course, all the ags are global markets.
Right.
Let me preface what we've been going through this year and the past 2-3.
Okay.
2013, 14, and 15.
Yep.
Globally were excellent years for crop production. In other words, no dominant destructive weather problems, either with heat or with dryness. As a consequence, farmers collectively around the globe produced more in 13, 15, and 16. So there was plenty of stock grown to consume and stuff left in storage as buffers. Hence the bear market. In beans, two points instructive to know. One, China is a massive importer.
Right.
And they import from three countries, the U.S., Brazil, Argentina. And China had made a policy decision, 10, 20 years ago, that they would grow rice, corn, and wheat in excess with the idea, God, if we have a crop failure, we'll at least have enough grain to feed humans.
Right.
And, and soybeans, of course, humans don't eat. Soybeans are fed to pigs and chickens, which humans eat. But in the case of a crop failure, you can do without your pigs and chicken as long as you've got your wheat and your rice. So China is a minimal, by comparison, soybean grower and relies upon the U.S., Brazil, and Argentina. So that's just a backgrounder to understand. So
Right.
they're always huge buyers. And what's happened just recently is this. Considering the grain trade, the parlance, the lingo of the grain trade is ending stocks. People are always quoting how much is left from last year's crop before the new harvest comes in left on the shelf.
Correct.
And so they always talk ending stocks. And in the U.S., ending stocks is like the September time frame.
Right.
And very high ending stocks, you'll get low prices. Small ending stocks, high prices. In the case of soybeans, going in the past 5 months, U.S. ending stocks have been estimated to be 450 million bushels of beans, estimated to be on the shelves come Labor Day, end of September.
Mm-hmm.
What's changed right here, think that number, 450 ending stocks.
Mm-hmm.
April 7th, it started to rain in Buenos Aires, and it rained there for 15 days straight, kind of like the biblical Noah's Ark story. It rained so much on the just completed soybean crop down there that the crop, that lots of it was washed away in effect. To the tune, the estimates are this, 370 million bushels lost out of the Argentinian crop just by those late rains. Now remember, April 7th, the crop's already grown. That's going into fall time frame down in Buenos Aires. Remember, Buenos Aires is just like Chicago, other side of the equator.
Right.
So you lose 370 million bushels from your estimate of global balance. Compare that to the ending stock estimate in the U.S. for beans, 450. You lost 370. That's a huge number. That's why beans have rallied.
That is an understatement to say that that's putting it all together. And thank you so much, John, for giving that insight. I learned a lot just listening for the last 10 minutes on that scene. I am.
John, the reason I'm asking you the question on entries and stop losses is, do we have is there further bull market ahead? And of course, that's going to be dependent upon, amongst other things, U.S. growing weather. And of course, I don't know that. But when bull markets start, you can often get much higher prices.
I like it. I like the action, John, because I like how it pulled back, hit that inflection point, and got the heck away from it. And is now looking like it's going to consolidate up here.
That's very helpful, John. Thanks so much.
Thanks so much. Okay, bye.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. And what an interesting slant coming from John in Philadelphia on the November bean trade. You know, what I was saying at the end, guys, is, you know, when you have these inflection points, you don't want to see things congregate around them, spin around, and just kind of compress into those things. That usually means we're going to have another flush. This is an awesome scenario. We got, you know, a big move up without question. Didn't look that great on the daily closing like that after the big move up. That was a Steve Rhodes candlestick kind of analysis. We should have piped him in for that. I'm sure there were some decent thoughts about that when it comes to candlestick analysis. But when we come back into this unfair high around 978 and just completely go ballistic again on the upside, now looks like we want to hang up there, and looks like we've got a little bit of a stake in the ground here around $10 a bushel to orient stops. And again, what John said was just crystal clear when it comes to, you know, you can make some money shorting beans, and if you're a cowboy, you can go up here and, hey, it's gone up too high, I think I'm going to try to get the high print on the short side. That is a very dangerous game to play. I love how he has, in his mind, blocked out the short side completely, not even playing around with it on a short-term basis, because the long-term view, and we talk about this all the time with the profiles. I'm going to pull up the scanner here really quick. Remember the Truman Show, the scanner. We're going to look at soybeans here. We're above profiles, folks. Long-term, the long-term view on beans is long, right? And if you want to trade with the trend after that breakout, and I think he pointed these things out, we were kind of talking about a strategy around 870, 868, something like that. And, you know, that's just been par for the course. The 915 confirmed completely, especially with the retest, that this ain't something to look at from the short side, and it's still not. And playing these dangerous games like, oh, wow, I could have made 40 cents on the pullback from the all-time high or the recent highs, forget it. It's not where the odds are. We're always trying to figure out where are the odds. And it was great to hear that from John from Philadelphia, because he's a smart guy. He's got great information. And when he says something like that and it coincides with what I'm thinking, I feel even better. Let's take a look at gold. Hope you guys can tell I got some sleep finally. Here we go. Gold. Nerve-wracking. Talked about this. Talked about only trading it from the long side right now. We're back above 1243. Again, you know, the long-term trade, the ultra long-term trade is still north. We hadn't had any breakdowns below profiles. As we've we had one there, but again, that was the uncle point. And then you're back in the game, finding support. Why? Because the long-term gold trade on the weekly has no mitigating information here to cause you to think that this thing's over on the long side. So that's the way we're looking at that. I want to point out, just like we had the note trade bounce right off the 129.02. Oh my God, no charts. Can you guys see the charts now? Let me reset this. Are we good? Okay, cool. All right, sorry about that. Yeah, if that ever happens, just give me a flash. Just like the note trade getting off this 129.02 to the tick and having this new demand area hitting here. Remember, a lot of times when these things stay in force, we talked about that earlier, it's about a 75% chance, historically speaking, that they're going to be explored even higher. Let's take a look at the dollar. Very similar situation. We're coming down into that inflection point, reached a low of 94.15. That unfair low is 94.13, rounded off. Might have a little bit of a trade and bounce opportunity on the dollar. But again, I want to bring this up in reference to something else John said, which is, where's the edge? What side of the marketplace do you want to block out? The long-term trend is still down on this, and we could actually get back up into 95.65. Be prepared for that. That's what you call a trading bounce, but the long-term trend is still down. I think Tom O'Brien's pointed this out implicitly and been spot on when it comes to this one. All right, crude. Talking about blocking out one side of the marketplace. All right, so again, we close above. This week we come back and test 42.50, 42.06 general neighborhood. There's when again, sea change event, in my opinion, breaking above profiles. Let's get the weekly back up. I don't know what just happened there. Remember, sea change event, breaking above profiles relative to what was happening in the past and how these profiles regulate the trade down. We're going to look at the daily. And again, didn't quite explore that entire thing. Get back into that 41.75, 42.06 yesterday, but that was what we were kind of looking at as like a kind of a collection area. I actually missed this trade. I thought I was going to go a little bit lower. But now we're back above intermediate support, 49.50. And that's where you can orient intermediate stops below there on the long side. Powerful situation here. Dollar could bounce a little bit. That could affect us a little bit. But remember, the long-term dollar trade is still south. All right. How are we looking? Here we go. Looking good. All right. Let me get this spread out here. And that 44, 49, 44, 48, those are daily and week and 240 unfair highs. I'm going to go back to crude oil really quick. Here's the crude oil trade. It is the June crude, and we're trading a little bit farther above profiles than to emit that top. I'm going to go back to the landscape view. See, that's where crude is. There's that 44, 49, 44, 48. I've completely beat this to death at this stage, and let me reset my charts, and we're going to move on. We're going to talk about Apple, little-known stock in the tech area. So pre-market, it's not going to be reflected in our daily charts on eSignal. I'm going to go into the dashboard here. You can set up. Actually, we're making some cool changes on the dashboard. You want to see something cool? Let me show you this. Let me log into this other version. Kind of proud of this. It'll pop up in a second. Here's Apple. This is showing you pre-market activity. There's where it's at right now, around that 96 area. There's those daily and weekly profiles, and here's the 60. Let me see if we can get this other thing up. Here we go. Check this out. I'm going to go into the indices. This is a former build. Just ignore the way this looks. And I'm going to go into Saudi Arabia, and here we go. And this is what Mustafa's kind of jacked up about. We're We're going to talk about this when we come back. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. I was just kind of alluding to this build we made for Mustafa in Saudi Arabia. He wanted an algorithm that we have running in the background and being able to see these signals on every stock in this exchange. Just the only one we're doing it on. It takes up a ton of server resources to do this, but he can enable what he wanted to see here, and we're kind of working through this percent profitable part, but it basically gives you the last trade, the current trade, whether it's long or short. It's been pretty cool. But we're still kind of working out some of the things he wanted to see in here. It's a special build, obviously, but kind of working on a long-short model situation, and which is really cool because, we talk about buying strong stocks and selling weak stocks. As simple as that sounds, relative to profiles, it's a very cool thing. And, we plan on doing a lot more with this particular basket trading type thing, but he wanted to see it delivering these types of things in here. And Larry says he even has heard of Apple, which is it's very cool. And I put a stupid comment there about we should make a phone called Orange. And you know what? I brought that up because I think about there's a facility that we're in Hong Kong called Cyberport. It's over on Larry probably knows where it is. He's in Hong Kong a lot. It's on as you're looking at Hong Kong, it's on the west side over there, kind of near Aberdeen. Larry, if you know where that is on Hong Kong Island, if you're listening. I say that because everybody in that building it's like 400 startups in that building, and all of them think they got the greatest new idea. They're all getting massive funding, and they hadn't really understood that 90% of all businesses fail, and everybody's running around with these business plans, and it's from a practical standpoint, most of those folks never being in business before, it's interesting to see how they act in their thought processes, not knowing really what the real deal is. And if you guys out there have owned your own business and have taken on some risk, and that it's you learn a lot, and your first time at the rodeo is usually not the best experience, and it's not fun to watch them squirm, but it's fun. It's interesting to watch the reality hit sometimes over there. Larry, if you've never been there, you ought to go over there. It's an insane cool place. And if you guys ever go to Hong Kong, look it up on Google. It's a really cool mousetrap. Cool, Larry. Cool. All right. Okay. So I'm sorry, we got off track here. Let's go back to Apple. And obviously 9603 printing this morning. This is where we're at with this thing, somewhere around there. We talked yesterday about not rolling the dice before this. A lot of things were kind of baked in the cake on the downside. Lost chart. Here we go. Let me get this back. Okay. So we're trading below this weekly profile, and the market is kind of holding up a little bit. If the market kind of drifts higher, I'm a little baffled on the U.S. stock market right now on that S&P index, but 99.80 or 100, that general neighborhood now is going to be resistance for this stock. Again, you've got a break below long-term profiles. This 104 was a big deal. Now 100 is going to be a big deal, 99.80. So don't think Apple's on sale. They've got some headwinds ahead. If you get any bounces in this back up into 99.80, 100, I think this is something to be sold. Right now, you can't sell it in the hole. Stay tuned for Larry. You'll thoroughly enjoy him. We'll pick it up tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.